What if I told you there is a completely legal way to avoid paying capital gains tax in Poland? Let me tell you about IKE and IKZE accounts. By using them, you can save hundreds of thousands in taxes. This is especially useful for everyone living and working in Poland. Just before we dive in, please remember guys, I am not a financial advisor and this video is not investment recommendation. This video is for education purposes only. IKE and IKZE are special types of retirement accounts introduced by the Polish government in 2004 and 2012 respectively. The main goal is to encourage people to save money for their future retirement. You might be wondering, why should I bother saving separately for retirement if I'm already contributing to the state pension system through ZUS? That's a valid point. However, it's important to understand that the state pension alone is unlikely to provide a comfortable standard of living after retirement. In fact, studies suggest that by 2060, the replacement rate in Poland could drop to around 24%. The replacement rate is a percentage of a person's pre-retirement income that is paid out by the pension system after retirement. Meaning if in practice your monthly income before retirement is 10,000 zloty with 24% replacement rate, your monthly state pension will be 2,400 zloty. Why will the estimated pension be so low? That's a topic for another episode. If you want to learn more how the state pension in ZUS works in Poland, leave a comment down below, so I'll make sure to cover this in the future episode. But let's get back to the issue of low pensions. In practice, it means many people will not be able to afford a decent standard of living during retirement. That's exactly why the government encourages people to save for the retirement on their own. Of course, just saving cash would not be a smart move, as inflation would destroy your savings. If you want to see how devastating inflation is, check out my video about this. That's why, to successfully save for the retirement, you need to invest. And here is where IKE and IKZE come in. First, let's look in details at IKE, which stands for Indywidualne Konto Emerytalne. In Poland, the standard capital gains tax is 19%. IKE account allows you to not pay this tax at all. Let's look at a simple example. Say you started investing at age of 25, putting away 1,000 zloty each month until you are 65, the typical retirement age. Your total contributions would be 481,000 zloty. Assuming an average annual return of 7%, your investment could grow to 2,410,000 zloty by the age of 65. Out of that total, almost 1.93 million zloty would be capital gains. Now, if you had made that investment in the standard brokerage account, you would have to pay 19% tax on your capital gains, which equals over 366,000 zloty. But if you invest through an IKE account, you don't pay any tax on that amount. Now ask yourself, would you rather keep 366,000 zloty in your pocket or hand it over to the government? Tough so. Sounds too good to be true? Can you really just open an IKE account and don't pay any tax? Not quite. There are a few conditions you need to meet in order to enjoy tax exemption. But don't worry, they are simple and easy to meet. Condition number 1, age. You must be at least 60 years old or 55 years old if you have early retirement rights. For example, special pension rules for some jobs. But for most of us, it will be 60 years old. Condition number 2, time of saving. You must also meet one of these two. You made payments into IKE in at least 5 different calendar years, or at least 50% of your total payments were made at least 5 years before you take the money out. What's important, you must meet both conditions, age and saving time, either 5 years or the 50% rule. Is there a minimum amount you have to pay into IKE? No, there isn't. You can even make just 5 payments of 100 zloty each in 5 different calendar years, and that would still qualify you to withdraw your money tax-free once you turn 60. Of course, if you only invested 500 zloty in total, don't expect too much for your retirement. Like with any investment, the more you put in, the more you get out. As I showed you earlier, the tax benefits of IKE can be huge. But remember, IKE was created to help average people save for retirement so they can enjoy a decent life after finishing their careers. It is not a tool for ultra-rich to avoid taxes, which is why the government set a limit of how much you can contribute each year. So what's the yearly limit? It is based on the average projected monthly salary in Poland and is calculated as 3 times the average monthly salary. For 2025, the projected average salary is 8,673 zł. So your maximum yearly contribution is a little bit over 26,000 zł. And since salaries in Poland usually increase over time, the limit also goes up. For example, in 2024, the limit was 23,472 zł. What if you need to withdraw your money earlier, before age 60? In that case, you will simply have to pay the 19% capital gains tax, just like you would with a regular investment account. So as you can see, opening an IKE account doesn't cost you anything extra. In the worst case scenario, if you withdraw early, you pay the same tax you would have to pay anyway. But if you keep your money in the account until you are 60, you get to enjoy the full tax benefits and keep 100% of your profits. Now the second account, IKZE. IKZE stands for Indywidualne Konto Emerytalnego. It's similar to IKE, but with one big difference. With IKZE, you get a tax refund every year if you pay income tax in Poland. But when you retire and take your money out, you'll pay a small flat tax, just 10%. So in short, IKE, no tax at the end, but no refund now. IKZE, refund now, small tax later. Sounds complicated? Don't worry, here is how it works. If you work in Poland, you most likely pay income tax. There are 3 tax levels in Poland. If you earn less than 30,000 per year, you pay 0 tax. Between 30,000 and 120,000, you pay 12% tax. Above 120,000 zloty, you pay 32% tax on the extra amount. The IKZE limit in 2025 is 10,407 zloty. Let's say you earn more than 120,000 zloty a year. That means you are paying 32% tax on everything above that. If you invest 10,407 zloty into IKZE, you can deduct that amount from your taxable income. So in your next tax return, you will get back 3,330 zloty in cash. Imagine the government giving you 3,000 zloty and saying, "Thanks for saving." IKZE is basically that. So what if your income is lower? If you earn between 30,000 and 120,000 zloty, you pay 12% tax. So putting 10,407 zloty into IKZE would give you a tax refund of 1,248 zloty. Still nice. But if your income is below 30,000 zloty, you pay no income tax. So IKE gives you no benefit. Also, if you are under 26 years old. Young workers don't pay income tax in Poland. So IKZE doesn't make sense for you right now. Now you might be thinking, whoa, that's great. I'll just put money into IKZE, get my 3,000 tax refund next year, and then just withdraw my contribution. But hold on, that's actually a very bad idea. Here is why. If you withdraw money from IKZE before retirement, the whole amount you take out will be added to your income for that year, and you'll have to pay income tax on it. Let's look at a simple example. In 2025, your income is 120,000 zloty, which means you are in the 12% tax bracket. You invest 10,000 into IKZE and you get a tax refund of 1,200 zloty. Nice. But in 2026, your income is again 120,000 zloty. And now you decide to withdraw the 10,000 zloty from your IKZE. Here's what happens. The extra 10k pushes you above 120,000 zloty limit. So now that amount is taxed at 32% rate. So in 2026, you'll pay 3,200 zloty in extra tax. But in 2025, you save only 1,200 zloty. That's a loss, not a smart move. That's why I only recommend IKZE if you are ready to hold your money there until retirement. You can withdraw it after age 65, and then it's simple. You pay a flat 10% tax on the whole amount, and that's it. No income brackets, no surprises, just 10% and done. So which one is more profitable, IKE or IKZE? Let's take a look at some example calculations. We assume a person who works in Poland and is in the 12% income tax bracket, starts investing at age 30 and continues until age 65, invests 10,000 zloty every year, earns an average 7% return per year. For IKZE, the person gets a tax refund every year and invests that refund into a regular broker account, not a retirement account, also earning 7% annually. What are the results? In case of IKZE plus tax refund reinvested, The final value at age 65 is 1,482,000 zł. In IKE account, the final value is 1,489,000 zł. If that person invested in the normal brokerage account, no IKE or IKZE, the final value after paying 19% capital gains tax would be 1,274,000 zł. So in this case, IKE gives slightly better results than IKZE if your income is in the 12% tax bracket. Now let's run the same example but with the higher income. We keep everything the same. 10,000 zł invested every year for 35 years. Tax refund from IKZE reinvested in a regular broker account. 7% average return. The only change is that the person is now in the 32% income tax bracket. New results. If that person invested in IKZE and reinvested the tax refund, the final value would be almost 1,720,000 zł. Final value of investment in IKE would be 1,489,000 zł. And of course the normal broker, after paying the 19% tax, gives the worst results. In this scenario, IKZE gives over 230,000 zł more than IKE and 445,000 zł more than using a normal broker account. So what's the conclusion? If you are in the 32% tax bracket, IKZE is the best choice. If your tax rate is 12% or less, IKE will usually be better. But here's the best part. You don't have to choose just one. You can use both IKE and IKZE because their limits are separate. In 2025, you can invest 10,407 zł into IKZE and 26,019 zł into IKE. That's over 36,000 of tax advantage savings in 1 year. Let's quickly recap everything we said about these two accounts and look at the table which shows a key differences between them. When it comes to tax benefits, with IKE, you don't pay any capital gains tax when withdrawing your money at retirement. With IKZE, you get a yearly income tax deduction and later you only pay a flat 10% tax at withdrawal. IKE contribution limit is set as 3 times average projected monthly salary, which roughly gives 26,000 zł in 2025. In IKZE, the limit is 1.2 average projected monthly salary, or 1.8 for self-employed, which gives around 10,000 and 15,000 zł respectively. To withdraw your money from IKE without tax, you must meet 2 conditions. Be at least 60 years old, 55 in some cases, and either make contributions in 5 different calendar years, or have at least 50% of the funds paid 5 years before withdrawal. For IKZE, to use the 10% flat tax, you need to be at least 65 years old and contribute in at least 5 calendar years. So those are the main features of IKE and IKZE accounts. Now a big question: how to open one of these accounts? If you've seen my previous videos, you know that I'm a big fan of diversified stocks ETFs. Historically, they've delivered around 7% annual returns, so the example I show you today are totally realistic if you invest long term. The good news is that you can invest in those ETFs using both IKE and IKZE accounts. To do that, I recommend opening an account with DM Bosch or XTB. I describe both of those brokers in this episode, so I recommend to watch it next. If investing in stocks is not for you, consider opening an IKE obligacje or IKZE obligacje account from PKO BP. This allows you to invest in Polish treasury bonds and take advantage of tax benefits. If you want to learn more about Polish treasury bonds, I recommend to watch this episode. That's it for today. If you don't want to miss future videos in which I explain how to invest in Poland, make sure to subscribe to the channel. Also, leave a comment down below with the topics you would like me to cover next, so I will make a content that is useful for you. Thanks for watching. I'm Piotr from MyInvest, and I see you in the next one.